Friends, trade and industry should ensure that the maximum benefit of GST 2.0 is taken by them. Whether or not the GST rates of their goods or services are reduced or not, all businesses stand to gain somewhat from GST 2.0. There are various facets to GST 2.0 like ease of living, etc. In this video, we are going to discuss how trade and industry should prepare so that they get the maximum benefit of only one aspect of GST 2.0, that is rate rationalization. So first up, there are many goods or services whose rate are expected to be reduced. The 12% goods and services like business travel, certain hotel stays, solar and other renewable energy devices, footwear, textiles, etc., which are presently at 12%, and most of them are expected to get to 5% GST rate bracket. Those in 28% like lead acid batteries, cement, etc., they are at 28%. Beverages, they are expected to come down to 18%, at least most of them are expected to come down to 18%. So first up, how do you take advantage of this GST 2.0 rate reduction? In case you are a GST exempt industry, like for example you are a hospital, you are into health sector, education sector, you are a charitable organization, or for example liquor industry, oil and gas industries whose output supplies are not taxable. For you, GST inputs and input services are a cost, and therefore it must be ensured that your purchase registers of goods and services, they are looked at, and all the suppliers whose goods or services rates are expected to be reduced, they are sounded off, so that whenever the GST rate reduction happens for them, the benefit is passed on to you, and you as a industry whose goods or services are exempt may also pass on the benefit to your customers and clients and consumers, so as to remain competitive and shoot up your demand. Sales and marketing departments of these industries would be certainly looking forward to reduce the cost of theirs and their sales price so as to boost up their sales. Second, for all other taxpayers who are not exempt, whose outward goods or services are not exempt, they have to look at this rate reduction for two reasons. Number one, for certain rate reduction on blocked credit, goods and services which GST is blocked. For example, Mediclaim and life insurance, whose GST rate is expected to reduce from 18 to 5% or even to nil. They are in the category of blocked credit generally. In case you are purchasing these Mediclaims or life insurance products in your businesses for your employees, etc., you need to ensure that you get the maximum advantage of these rate reductions. Second, even if you are taking input tax credit, but almost all businesses have a proportionate ITC reversal to some extent, large or small. So you need to ensure that actually your suppliers pass on the benefit of GST rate reduction so that your proportionate ITC reversals, they are optimized and your costs to at least this extent is optimized. Third, traders. For traders, this GST 2.0, specifically those whose goods or services rates are reduced, this is very important to see that the inventory levels at the time of rate reduction, that is optimal, because on those inventory where your goods rates are reduced, for those inventory at the transition space, that can result to inverted duty structure. You purchase at a higher rate and sell at a lower rate. So to ensure adequate liquidity, you need to ensure that optimum stock is with you during this transition phase. Again, in case you are a trader whose outward goods or services rate is reduced, outward goods to be precise, rate is reduced, then you need to ensure that your supplier also reduces the rate appropriately. In case your supplier does not reduce the rate and you reduce your rates, then it may lead to again an inverted duty structure, and it may also lead to litigations going forward. Your ERPs for purchases, whenever you are accounting, you have ERPs and you have masters for your suppliers of goods or services. You have to ensure that your ERP systems, they are ready to be amended in terms of masters of suppliers, so that your accounting is not incorrect when the rate reduction actually happens. And last, from the inward suppliers part, your contracts with your suppliers whose goods or services rates are reduced. I have given so many examples: footwear, textiles, renewable energy, solar, cement, etc. For real estate, cement is a big cost. So all your contracts, your inward supply contracts, they should be again revisited to ensure that you, as a outward supplier of goods or services, you get the maximum benefit of GST 2.0 in terms of cost and can pass on this to your customers also. Now coming to the outward suppliers part, in case your goods and services rates are reduced, you must ensure, like for example, if you are an FMCG player or into the medical equipments etc. space, where you may charge your customers on an all inclusive GST rate, you need to ensure that the pricing on top of your goods or services, that is amended on the day when the notification for the rate change comes into effect. You must ensure also that your outward supply masters, they are amended so that there is no glitch at the time of rate reduction and that becomes a cost to you. And most important, in 2017-18 when GST had come into effect, there were certain formats, certain calculations for anti-profiteering. You, in case your goods and services rates are reduced, you need to ensure that those calculations are revisited, reinvented and kept ready, so that in case there is a query on anti-profiteering, whether you have passed on the benefit of the GST rate reduction to your consumers or customers, you can appropriately reply to them. So friends, these are the various changes and preparations you as trade and industry need to undertake, so that you are adequately prepared and can take the benefit of GST 2.0. Thank you very much for watching. Please do like, share and subscribe to this channel. Thank you very much. Stay tuned.